3, 2, 1.
Alright, so hi guys, welcome again to another video. So in this video I'm going to talk you guys through what my current positioning is at the moment, and I'm also going to walk you guys through why I've done the trades that I've done, and you will see that I will show you guys the P&L for those trades, and we'll talk through a few concepts. So I think the first thing I'm going to do is I'm going to go through the charts, right? So I'm going to talk to you essentially at what I'm looking at, why I'm looking at it, and what my expectations were. Right, so if you followed my previous videos, and if you haven't, then just basically head to the main YouTube channel and then just select the playlist that you want, and you'll see the rest of my videos that I've covered. I've been looking primarily at dollar CAD, right? And I was also looking at cable, which I've got positions on, and I've got positions in crude as well. So these are my three assets. I was also looking at the USD dollar. I think I was just a bit late on the entry with that one, just because the Australian market opens a little bit earlier than the European market, so I was asleep when this play actually happened. But it would have been a good opportunity to be in on the long side of the Aussie dollar, right? And I look at everything through the lens of market profile. So if you don't know what market profile is, then you should keep watching some of my videos, right? So the profile is just really a graphic representation of price distribution, and it's what professional traders tend to use to kind of give themselves a very good understanding of what's going to happen in the long, medium, and short term, all within one view window or one viewfinder. Again, people who do multi-time frame analysis on candlestick charts have to keep swapping between a weekly, daily, monthly, etc. With the profile chart, you don't necessarily have to do that. In fact, I execute all my trades on a weekly profile, and I'll show you exactly how that could be good for you and much better for you with your trading. And essentially you'll also find that you are going to be able to manage risk better, and your positions are going to be a lot more profitable in the long term. Everyone thinks that they should trade short-term charts, of course, that's the general synopsis. Not to say that scalping the market is bad or that you can't achieve success from doing so, but it's not really possible on all markets, just because of the volatility, and sometimes it can be really hard for you to determine what levels you should trade from, and you basically have to contend with the volatility as well, which is it's quite changeable on a shorter time frame. For myself, I focus on the weekly profiles because they give me the best viewfinder, and from there I can pretty much execute into longer term trades. I can scalp the market all from this profile. I don't really need to see any others, but again, if you wanted to add like a daily profile to give you some context, for example, you could do, but the weekly profile for me is that comfortable middle ground. So essentially each profile is a week, and we can see that, and that gives us almost up to a year's worth of price action. I mean, I'm looking at so many weeks worth of price action here that can really determine where the market's going to turn around. Okay, so let's swing into this. So starting with crude oil. So I'm long crude. Well, it's kind of obvious at this point because as we traded lower, I was having a chat with you guys on the last video about first there was a value trade on the downside, right? So as we traded through this value here, that was a good opportunity. But as we extended out on crude, some key levels started to stand out: 68.88 for a response, and then finally a touch out at value low going back a couple of weeks, right? So again, you can see that strong reaction on S period. As soon as I was able to see that single print steady itself here, for me it became pretty much an entry. I mean, the thing is, because it's a weekly profile, I had a lot of time to observe the price action as it bounced and it steadied, traded a little lower, failed to take out the prints. Extremely competitive behavior from buyers, a lot of responsive buying. We're trading near all-time weekly lows. Perfect entries, right? So I was already positioned to get long as soon as we were back within this value framework, right? So again, that's some of the the benefits of understanding the profile is being able to see where the trade location is best. Right, so again, I position long on crude, right, and I'll show you guys those positions. I will pop them to the right hand side of the screen very shortly because this is a recorded video, so I figured that I'd probably just put them all up on the screen. Again, if I were to go here, for example, let's go, cable. So cable, I'm long. I was long from, where are we? From the K period print. So again, when we opened the profile, and the other thing you can do with profiles is you can split them. So as we traded lower, right, and we were trading into what I call a bid stack, and it's a small value area. So we tend to get a value trade or a smooth move through value very quickly. But then value low for me is always a good support level. So as I observed the price action back into value low, and then we got that bounce there, I could preempt this. So as we were trading lower and we started to bounce in real time, I could preempt this and get into a long position. Obviously that long position has done really well in the week, right? And again, this highlights the point that you don't need. So for example, with my position, getting long at 24.50s and having my stop below, even if you get long at 24.60s and you have your stop just under value low, which is 24.29, it's only about 40 ticks worth of stop, right? So these assets are really trading on their weekly frames. They're not showing any extensive volatility on the weekly profiles. And of course, if you're looking at these profiles, I mean, how many times do we actually see an overexpansion in volatility? And those tend to happen on major events. So this is when we had all the interest rate stuff, for example, and then you get these huge expansions in volatility, and some of these profiles take you back. So if we take, for example, this one here, just break down, look at the date, that was the 29th of January, right? So if you look back on what was going on the 29th of January, you'll be able to see that it was very news responsive, this huge drop we got in the pound. And once we started to trade lower, right, you can actually see us as we started to break these key levels and settle. We were trading very close to a bid stack, but also we were trading near enough value low midpoint. So again, if you're going to get long here, then you have to have a longer time horizon, because really and truly you'd want to position stopwise a little bit lower. And if we look at how the weeks went, right, so if we just split these profiles here, we started to bounce, and if we split this one here, we actually traded up through the gap, filled the gap, and then traded lower. So, you know, again, depending on where you entered, now let's say you took the bid stack, it was still, you would have been safe in this trade for 215 ticks before we rolled over. So again, it's just about having that perspective, right? I personally like to look for levels closer to value low for the reasons that the profile states. And you know, again, if we look at the work of Peter Studemeyer and we look at the work of Stephen B. Hawkins, you can clearly see that this is the kind of level that would attract you to get long. Obviously, in coming weeks, we did end up pressing a little lower. But again, when you think about protection, if you're managing to get these outlier prices, we're always looking for lows under here for protection, right? So hard to reach places for your stops. So you're needing to take larger stop positions, but again, you don't have to trade big, right? What you need to be doing is diversifying properly across the assets that you trade, but trading in smaller sizes, so exposing yourself less and less to the market, but also doing that in a way that you're able to capture the volatility, but also have smaller risk on the downside if we expand. And that's where concepts like position sizing come in. So again, from where we are now, so just back to the historical, we can see where we are. So next week, as we open, depending on where we close this week, my expectations are as we come into the US session, we might dip a little bit lower back into value. But again, when we look at this value area, we start to anticipate where potential supports are going to be. So even if we start to trade lower, I'm not going to panic. What I'll be looking for is some responsive buying that would allow me to maybe add to my position, for example, or at least just stay steadfast to push us back to break these highs going upwards. One of the things I do before I come to the profile is determine the macro picture. So guys who've followed my stuff for a long time know that I'm all about the macro picture. So I'll always determine the macro picture first before approaching the profile to make those trades. And I'm always looking at the monthly and weekly macro structure. I want to know where these things are going to be in a couple of years. If I can deduce that from the structure, then I'm always trading in the direction of where the best moves are going to be. And even if I'm contrary to the main trend, I'm going to know exactly where I want to come out or where a bounce is likely. And that means that when we get weeks like this, right, where volatility just expands, you can do pretty well. So for example, we traded the value highs here, we started to break down, and immediately a good trade location would have been to be short back into the offer stack close to value high, and then you'd want to have your risk a little bit further out. So it's about 80, 100 ticks worth of risk, right? And again, as we push lower, look at the volatility expansion, right? It was huge. I mean, we literally destroyed 1, 2, 3 weeks worth of price action in the space of a week, right? And this is what we look for when we trade. So that's why we don't need to trade too big, because again, if you are positioned correctly and this thing is cascading, right, against the week, right, so we're tearing through value, this should have been your target, right? So it's about 277 ticks on a full lot. That's about 3 grand, right? And that's 3 grand in a week, right? Let's say you were doing a third of a full lot. That's 1k in a week, and that's just on this position, right? And when you assess your risk on that trade, if you traded it perfectly up to here, well, that would have been roughly about 200 quid, basically 250 maximum worth of risk on this trade, right? So you don't have to trade large, right? So you'll be literally trading the approximation of about 0.33 to 0.4 on a MetaTrader lot size, right? And that's what you're capitalizing on. So it's less than half a lot, right? But it still gives you a decent return on a week, and that's the beauty when you're using the profile. So anyway, I'm long cable at the moment, and I'll show you guys P&L shortly. So again, if we go to $CAD, so I was short $CAD, and let me just see if I can grab a screen that I did of these P&Ls, so I can pop them up here so you can really see what it is that I'm talking about. Yeah, there we go. Right, so anyway, that is when I'm pulling that up here. So I was short $CAD as well, and the logic behind this as well was quite simple. Again, structurally, my structure was telling me the macro picture is a little bit lower for the dollar, right? So we could get a retracement as we trade into these lows. So I was well aware that I could be trading contra to that picture, but I wanted to kind of take advantage of the fact that we were dipping, and we can see there was lots of offer stacks here, and this was a pullback against the week, and we traded value high, and then we were building, so we had an offer stack. So as we started to retrace back, I wanted to be short close to value high, and then have risk either above the week's high or above the 1, 2, 3, 4 week high, right? So that would have meant for good protection. But because of the fact that I'm only looking at this back into 133.55, and I'll assess as we drive into that whether there is room for continuation, right? So, but I could end up getting a really big drop next week. Who knows, right? So again, I can also see there was a gap here to fill, right? And we're close to filling that gap. We haven't entirely filled it yet. We're almost there. And we normally kind of retest value a little bit, and then if we're going to pull back, we're going to pull back from there. So there's a slight bid stack here. So again, if we don't break that, then we're going to see some upside. But I wanted to be trading from here to get the best trade location. So I thought being short the dollar was a good play, especially in earnings season as well. You're going to see a lot of volatility and a lot of movement. So that's kind of my general reason why I was short $CAD, right? So you can see here I've got crude, $CAD, and cable as positions. So let's just spin this up on the screen here so you guys can see my P&L. Oops, that's it. Oh god, it's not wide enough. Let's see if we can expand it out a little bit. Right. right? So that's my P&L running, right? So as you can see, it's 728 for the week, right? So you can see when I took these positions, right? So you can see the opening times, and my latest position, my oldest position is the 1st of May, guys. It's the 1st of May. Today is the 5th of May, and I'm already up. Granted, I'm up on higher on some than others, and this P&L will fluctuate over time. But if all my targets are achieved, right, so the weekly gives me a very good opportunity to assess, right? It gives me an opportunity to assess. It lets me look at what's going on, make a more accurate decision than having to worry about the short-term picture. And that puts me in a better commanding position, right? So you can see my lot sizes are quite small. I mean, I've got a 0.3 accumulated on crude oil, for example, and I've got 0.5 on dollar CAD. Obviously, dollar CAD, you know, it's a smaller kind of position in terms of notional, and we've got 0.4 on cable. Right, so if we add all of these together, it's still quite a few. It's just over a lot, but I'm doing pretty good on the week. So if I take that and I add that as well to some of the stuff I do, for example, on my options plays, so you can see my options chain. So if I collect all the income that I collect against the week, it's pretty decent for anybody, right? So my point I'm trying to make is that you don't have to trade big. So your exposure to the market doesn't have to be massive for you to do well. You just have to have a slightly longer time horizon in mind, and you should be able to look at these from a long-term macro perspective. Right, so that's kind of I just wanted to show you guys this so you can sort of build a picture of how all of that sort of stacks up, you know, in terms of P&L. Right, so again, now remember, that's why I stand this week, right? I'm actually looking for more downside targets, and in the back of my mind I've added up that, well, this is going to be a 2-3 week move on these things anyway. So with expansion of volatility, imagine that we expand volatility from where we are by double what we've done today, right? Now that will double my gain that I'm currently lapping up on dollar CAD, right? And let's think about this for cable. Let's say we keep expanding and we get a big break to the upside, right? Let's say we're trading 128. That will also expand my gain on cable, right? So I'm not needing to take any more risk on these positions. I just need to manage them. Now, same with crude oil. If we were to keep bouncing, let's say we open, we've already retraced most of the week. We're going to open mid-value. So even if we do trade a little lower, I don't mind. If we get a big bounce, then we could easily be up back at the 80s. So again, imagine the impact on P&L. So if I put that all together, in the next 2 to 3 weeks, I'm going to have a pretty decent P&L depending on how things go. And even if we do go to the downside, I'm quite well protected because obviously my risk on all of these trades are pretty small despite executing in a longer time frame. So again, hope this has made sense to you guys. I hope you enjoyed the video. If you did, hit the like button, smash subscribe. Yeah, good to have you guys watching, and I will be sure to post more updates in the coming weeks and the coming days. But till my next video, guys, I must say adios.
3, 2, 1